Four things for success: work and pray, think and believe. Dr. Norman Vincent Peale. And Dr. Peale is so correct. It's all about your mental attitude and how you focus yourself day in and day out. 10 to 15 minutes a day. That's all it takes. I'm serious when I tell you that, but when I say day in and day out, it's not an hour once a week. It's not 2 hours every month. It's not hit and miss. It's every day. Why? Because there are nuances that happen every single day. And if you're not following these charts, you're not going to get it. If you want to supercharge your training, use that daily market worksheet. Use the weekly market worksheet for what we're about to do. That is the comprehensive review and forecast. And you practice trade as often as you can, and you use the trade worksheet. Now, big bonus for you guys. We are putting out in today's show notes, for those that subscribe for free at chartingwealth.com, you're going to get all three parts to the Options Made Simple, the Charting Wealth way. You're going to get all three parts in today's package. That's all for free. It's going to be in your show notes. You have to be a subscriber. chartingwealth.com. It's for free. If you haven't purchased our book, we'll be happy to send you a copy of the 13th printing autographed. It's waiting for you. Follow the link in the show notes to purchase the book. Also, Patreon supporters, thank you so much for your support. Don't forget, we will have coming up very soon at the beginning of December, we're going to have your call-in show, our question and answer session, where we give you even more in-depth training. Now, let's jump into these charts. We see bonds and stocks down for the day, gold up. Let's jump first into stocks. Regardless of what things did on that shortened trading day for Friday, we had an up week. You can see it in the charts. Price above the weekly trend line, a little bit above the right there on the 2-day trend line. We see the price percent oscillator moving up nicely. Derivative oscillator gaining upward momentum on the weekly chart. We go to the 2-day. Look what we see here. Now, this is interesting. Very important to pay attention to. In fact, we're going to redraw the trend line a little bit if we can move it forward some, because what happened back in time is important, but what's happening now is very important too. And it's really hard to capture because we like to connect 3 candles. We don't want to cut candles off, so I'm trying my best to do it. There we go. So I've done it on the 2-day trend line. And of course, this latest candle, look at what happened with it. The high on this candle, 315.13. The high on the prior candle, 315.58. 315.48. 315.13. So we didn't reach as high a high on this last candle. Candle body up a little more, but we can see that reflected in how flat the price percent oscillator is. I'm trying to back off so you can see it. Pretty flat there. It's out of the screen. Still moving up a little bit. Derivative oscillator losing downward momentum. A green up candle still, but we go to that 4-hour chart, and this is where you see what happened on Friday. Down in the morning and down again in the afternoon. So started off lower, moved lower, down 0.36%. Don't have a crossover going down yet. And again, the weekly chart is still decently strong. The 2-day chart showing a little bit of weakness, not hitting a higher high. So we're just going to pay attention to that. But again, remember, our main focus is always on the bigger the chart, the bigger the potential. And we do see, again, that price percent oscillator getting flat on us. So just again, some caution as we end the week. Pay close attention. Derivative oscillator also on that 2-day chart has lost a lot of energy. So we'll keep watching. Caution as we go into the new week. Now we go to the Qs. Qs down for the day, more than the S&P 500, down 0.46%. And again, we have when we look at and let's always start with the weekly chart, we did hit higher highs, bigger candle, higher highs. That's looking good. Price percent oscillator heading up, derivative oscillator heading up. Weekly looks still strong. Go to the 2-day chart. Same kind of thing. We look at that price percent oscillator. It's flat. Derivative oscillator losing momentum. Did not hit a higher high on this latest 2-day candle. So that's a little bit of concern. Go to the 4-hour chart. And again, we see things tapering off. Now, that happened before. If we look back on the 20th, we had 2 days of down movement, then sliding sideways, then popping off. Sometimes a market just digests upward movement and then takes off again. So just, again, caution as we go, as we complete our comprehensive review and forecast, and we just continue to watch, see what there is to see. On both the stock charts, the weekly is still strong, 2-day showing some weakness. Note that in your show notes. Pay attention to it as we move into the new week. Now let's go back to the weekly and to bonds. Bonds down 0.21%. Now, we have 2 weeks of up movement in bonds. What has that done to the weekly candle? Well, it's still heading down just a little bit. Derivative oscillator still negative. We had a lot of down movement in bonds starting back after the week ending the 30th of August. We had a few down weeks, some sideways, a little bit of up weeks, then a bunch more down weeks, 5 more, and then these last 2 weeks, some up movement. Not enough to rotate over the price percent oscillator yet. So still down. We go to the 2-day chart. Of course, it rotated over back on the 22nd. And this week, though, we see a red open box spinning top, means indecision, tending down, although it is a red open box. So not as down as a solid red candle, not as down, not as much potentiality as with even a doji. So we'll just continue to watch. Just could be a hesitation in more up movement on that 2-day chart, but keep your powder dry. Pay attention. We don't have a trade in bonds at this point because the weekly and the 2-day are moving in opposite directions. We see over the last few days, that's 3 days in particular, things sort of topped out back on Tuesday and then slid sideways since then. We did have a crossover at the end of the day on Friday going down on the 4-hour chart. What does that mean to us? Not a whole lot right now because we've got to get the 2-day trend and the weekly trend sorted out. Don't have a trade when they are conflicting. Go from bonds to gold. Gold up for the day 0.46% now. We ended gold with a down week. Prices below that weekly trend line. Weekly price percent oscillator still heading down. Derivative oscillators about flat. So gold still overall mood down. 2-day chart still down, but we see the price percent oscillator moving up a little bit, still negative. Derivative oscillator still negative. 2-day chart ended with a green doji. Lots of indecision, tending up after 4 days of up movement, then a doji, and then 4 days of down movement. Now we have 2 days of indecision. So we'll just continue to see, watch and see how gold, of course, continues to sort itself out. Now, for those of you, and again, we'll just continue to watch, just remember, 2-day chart showing some indecision. We could probably redraw our 2-day trend line at this point. We'll go ahead and do the best that we can do right now on that 2-day trend line. Price is right there at it, below the weekly. And then we go from the 2-day to the 4-hour. What does the 4-hour show us? Of course, we're seeing things notch up big in the morning and then in the afternoon, sitting right above that 2-day trend line. So again, keep your eye on the price. Pay close attention to that 2-day chart and that weekly chart as gold continues to move along. Remember, the overall mood in gold is down. Always set your loss limits, always set your profit limits. And you do that with a good till canceled sell order as soon as you jump in. I want you to practice these things all the time. The more you practice it, the better you're going to get at doing it. So please, whether you're practice trading, whether you're trading with a virtual platform, however you do it, be sure to fill out your trade worksheet. And again, practice, practice, practice. This is how you get good at it. Don't start spending money. You start spending money, you lose that money, it's going to deflate you, depress you, and stop you from doing this. Practice trading is the best thing that you can do. And once you get good at practice trading with ETFs, with stocks, that's when I want you to switch over and start experimenting and practice trading with options. That's why we put together this entire options training, available for free in your show notes to all who subscribe at chartingwealth.com. We love to hear from you, my friends. CW@chartingwealth.com is how you write us. You live overseas. You can't use Square to clear your credit card. I don't know why. For some reason, they don't clear overseas credit cards for us. But if you will email us, cw@chartingwealth.com, same address, we'll send you an invoice, pay that. We'll send your book to you wherever you are in the world. If you live in the States, use that link to Square. Order the book. We'll get it out to you. And again, more interested in Patreon, follow that link. God bless you, my friends. All the best from the whole team at Charting Wealth World Headquarters.